Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. Getting a hard money loan is a creative way by which buyers are seeking a competitive advantage in today's super competitive market. The question is, how do you write up a hard money loan in a contract? Well, here are 3 ways to write up a buyer's hard money loan in a real estate contract in Georgia using the Georgia Association of REALTORS or GAR contract package. I will also touch on how to address this matter using the RE Forms contract package. But stay tuned to the end because I think the 3rd method may just surprise you. So let's back up a little bit. What is a hard money loan? Well, a hard money loan, in essence, is you may have also heard it called a private money loan or private money. And in essence, what that is it is a short-term loan from a lender or an individual, but usually it's from a non-institutional lender. And it could be a company, a lender, an individual. And it is a short-term loan, usually at a little bit higher interest rate than a prevailing rate at a bank or a mortgage broker or a credit union. And a hard money lender might look at a borrower's credit, assets, look for something for collateral, but they don't necessarily use all of that information in order to determine if they are going to lend an individual that money or that hard money or not. And again, you may have heard it called a private money lender, but it is not an institutional lender. It is from a private source of money. So let's go back to the contracts, and in terms of the Georgia Association of Realtors contracts or the GAR contract package, this first method of the 3, I think, is one that you as agents are familiar with. And that it would be using the GAR exhibit F404. And that exhibit is the all cash sale. You'll hear it referred to as, or you might talk about it as the all cash exhibit. Well, it is an all cash or no financing contingency exhibit. So in this form, GAR F404, under the first paragraph, it does specifically indicate that it can be used for a hard money loan. It says an all cash loan where the buyer does reserve the right to pay for all or a portion of the purchase price by obtaining a non-institutional first mortgage or other loan, including a private hard money loan. So you could go through that and use that form that does specifically call for a hard money loan. However, as the name of this document implies, it is no financing contingency. So this is conveying or disclosing to the seller that the buyer is using private money, a private source of money. It's not their own, not necessarily their own cash they have, but they are getting a hard money loan from a private source. But if you use this document, the all cash or no financing contingency, you need to keep in mind that the buyer is choosing to not make the purchase of the property contingent upon their getting the loan, the hard money loan from the private lender. However, methods 2 and 3 sort of address a little bit different issue. What happens if the buyer is getting a hard money loan, but they want to make their purchase of the property contingent upon them getting the loan? What do you do then? Well, that leads me to methodology number 2. And methodology number 2, again, using the GAR or Georgia Association of Realtors contracts, would be using the general contingency exhibit, which is GAR F607. So in that form, it's called just a general contingency. Now, the buyer and the seller are going to want to go through and look at this because there are, in this general contingency exhibit, it would be making the buyer's purchase of the property contingent upon the buyer receiving the loan from this private institution or individual private source. In the general contingency exhibit, however, there is a kick-out clause. So because the buyer they're getting a non-institutional source of funds, the seller might, and they want to make the deal contingent upon that, the seller might say, that's fine, I will agree to that. However, I am going to add in a kick-out clause. So as agents, y'all need to go through, and the buyer and the seller can negotiate what options get kicked out, or if a kick-out clause is going to be included or not. If the buyer and seller do choose to use a general contingency exhibit, again, that's F607, there is another form in the Georgia Association of REALTORS contract package that is GAR F707, which is an amendment to remove a contingency. And this is just a general amendment to remove a contingency that would be used in conjunction with a general contingency. And you'll see as you go through that form that once a contingency, in the case of what we're talking about here, buyer getting a hard money loan, making the purchase contingent upon receiving those funds, when they remove that contingency, you would use this form GAR F707 to remove that contingency. Now, I know what you're thinking now. You're thinking, well, what about just writing a special stipulation? Again, this would be up for negotiation between a buyer and a seller. If they do want to still buyer's still getting a hard money loan, the buyer still wants to make the purchase of the property contingent upon them actually receiving the funds from this private source, and making it contingent upon that, but not necessarily including a kick-out. In that situation, you would want to use you could use just a special stipulation that would make the contract subject to the buyers receiving these funds. Now, I'm not going to give you the actual verbiage right now. Check with your broker, check with the closing attorney. Just remember, in general, for any special stipulation, you want to write out what is the special stipulation, what are the terms of the special stipulation, what happens if it is not, what's the time frame, what happens if it is not achieved, are there termination rights, and what happens to the earnest money. So those would be issues to address in a special stipulation. Again, check with your broker and check with a closing attorney for some verbiage to help you out with that. Now, before I get to the third method that I think you're going to enjoy, let me briefly just touch upon how you would address this issue using the RE forms contract package. So, in those forms, in the actual contract in and of itself is the financing contingency. So, paragraph 6.3 in the actual contract, so you don't need any exhibit, you don't need any additional documentation, is the financing contingency for a buyer purchasing a property using the RE Forms contract. And the RE Forms contract is RE Form 100. A lot of agents here in Georgia refer to these forms as the FMLS forms, since that's where they have readily available access. But as an agent, you are going to have access to this RE Forms contract package through wherever you access your contracts, whether it be Remind Docs Plus in FMLS, Transaction Desk in Georgia MLS, Dot Loop from your broker perhaps, or any other MLS. But nevertheless, paragraph 6 are all the contingencies in the contract, and paragraph 6.3 is the financing contingency. So a couple things. If you just do not check that box, that makes the contract for the buyer an all-cash contract, not subject to any financing contingency. But for a buyer getting a hard money loan, you cannot use this because it does specifically say in that paragraph that this paragraph is if a buyer and seller agree to a financing contingency involving other than a new first or second mortgage from a third-party institutional lender, such as a loan assumption, seller financing, then an additional exhibit or special stipulation must be attached hereto, providing the additional terms of that financing. So if you're binding under the RE forms contract or negotiating an offer for that, you would have to include a special stipulation, or the RE forms also has a generic contingency exhibit, which is RE 250250. And you would spell out the terms of the buyer's hard money or private money loan in that. This does not have a kick-out clause in there. You would actually go through that and use that generic contingency exhibit. So again, I just wanted to touch on buyers and sellers who are using the RE forms package. Okay. Number 3, y'all are going to be a little bit surprised as to the third method that I'm going to present as to how a buyer conveys in a real estate contract in Georgia using the GAR, Georgia Association of REALTORS forms, how they are getting a hard money loan, and if they do choose to make their purchase contingent upon that. I want to thank the Maximum One Greater Atlanta compliance broker, Kim Murray, for bringing this to my attention. I had always advised agents to use the cash exhibit, the all cash or non-financing contingency exhibit. Kim, thank you so much, pointed out to me that, well, what happens if a buyer wants to make their purchase contingent upon getting that hard money loan? Well, ready? Check this out. In the GAR actual conventional loan contingency exhibit, which is GAR F404, you do have the option. This exhibit does not specifically reference an institutional mortgage lender for the buyer's first mortgage. So you go on, and in paragraph 1, you do have to spell out all the terms of the financing, the loan amount, the term, the interest rate, and if it's fixed, adjustable, or interest only. But on this exhibit, in the last column, and you'll see when you're looking at this exhibit, it has a place for the source of the loan. And one of the sources is institutional. So that would be an institutional mortgage broker or bank. Then it has seller. That's what you would use for seller financing. And then it has a checkbox for other. That would be the option that you would use if a buyer is getting a hard money loan and choosing to make their purchase contingent upon that, but the source of the funds is private, and you want a third method, they want to make their purchase contingent upon that, you could use the conventional loan contingency exhibit and just check other as the source of the loan terms. Now, you listing agents, if you receive an offer and it has this conventional loan contingency exhibit on there, you need to check that other box. You need to pay attention to that and determine are the source of the buyer's funds from an institutional mortgage, institutional bank, a traditional mortgage broker. If other is marked, then when you're representing the seller, you would want to find out a little bit more about the source of those funds and get a little bit more information. So pay attention to that. So I hope everybody learned a little something. I hope option number 3 surprised you. I'd love to hear about your experience right now in today's market with creative ways that buyers are using to make their offer stand out in a competitive, this hyper-competitive situation, and how you guys are addressing a buyer's source of funds being private, you getting a hard money loan for purchasing a home. We get calls and emails all the time from agents. So please be sure that you're subscribed to stay completely up to date with everything related to real estate contracts in Georgia. No matter how complicated it may sound, I'm here to make it crystal clear. If you enjoyed this video, you'll love the one on the screen now. Thank you guys so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.